You know what I just did?
What'd you do?
I moved my cell phone further away from the equipment. Maybe that helps. Nah, didn't.
It's still there a little bit.
All right. Anyway, hello everybody out there in Facebook, LinkedIn, YouTube land. I'm just getting started with the radio show. I had a false start a couple of minutes ago. I jumped the gun, but I think we've got 30 seconds, Sebastiano?
We actually have a minute and 5 seconds left.
Oh, okay. So you guys are stuck with me for another minute before we get the show started, and we're going to talk about how much money you could spend. A good way to figure out what your spending is, because I see people struggle all the time trying to figure out where the heck their money went. We're going to talk a little bit about taxes, okay? And I want to warn you guys about some scams, all right? No 1099-K going out for this year. In other words,
30 seconds.
Okay, and the IRS warns us to expect smaller tax refunds.
20 seconds.
Okay, plans for cash, GDP out. Lots to talk about.
10 seconds.
Okay. I have to do that before every show. So the music's going to come on any second, and it's not going to be too loud this time.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
All right, when we cue the music, it's time to get the show on the road. What a privilege to serve you, my fellow Long Islanders, and it's also a privilege to be on the air after the great Jay Oliver, who I think is the best in talk radio, and we are lucky to have this guy here on our station, LI News Radio, 103.9. Tune in every day at 9 a.m. We get started with Money in the Morning with Mitch Goldberg. That's me. So we are going to talk about a couple of things today, and there's just so much going on. But first, let's cut to the chase. Dow futures are up 85 points, up a little, 0.25%. S&P futures are up a little, about 0.5%, up 23 points. NASDAQ futures are up a little bit over 1%, up 121 points. We have Tesla to thank for that. Oil is up $1.60 at $81.75 on West Texas Intermediate crude. That's the stuff that we source domestically. Interestingly enough, Chevron announced last night that they're going to raise their dividend and initiate a 75 billion with a B. That's $1 billion buyback. That is literally a little over 20% of the entire value of the company that they're buying. So we talk about drilling, but Chevron is not putting their money into drilling. They're doing a big buyback. Hey, I don't mind. Chevron is a stock in the major averages in the S&P 500. It's a stock that when people want to buy an individual stock in the oil patch, it's usually Chevron or Exxon are the first two stocks people turn to. By the way, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. You're going to get used to me saying that all the time because it's just like a little disclaimer that we have to throw out there on Radio Land. It's a good disclaimer, though, even though it kind of sounds obvious, but you have to throw it out there. I have another disclaimer for you. I ain't your accountant. I ain't your mama. I ain't your papa. I don't give tax advice here, but I do talk about taxes because it's a seriously important part of money, of managing your money. And speaking of taxes, the IRS has warned, I don't know, maybe warned is too strong a word. The IRS is letting the taxpayer, that's you and I know, that we should expect tax refunds to be smaller this year. So when you file your 2022 taxes, which you're doing now in 2023, because it's tax season. Tax season started last week. It goes through April 18th. That's the tax filing deadline. And if you extend, if you take a filing extension, you have until October 16th for an extension. So why do we expect smaller tax refunds? Basically, because the expiration of the child tax credit and lots of other goodies that were handed out for tax policy to help the economy get through their pandemic. So people have less tax credits, and there's a few other things that are going to be eliminated. Now, this doesn't mean every single one of you who expects a tax refund will have a smaller one. Taxes are a very individual thing, and this stuff may or may not affect you tax-wise, okay? But I will tell you the standard deduction has gone up. So for a single, it's $12,950. This is for, again, when you're filing your 2022 taxes now. And you could start filing your taxes. You could file now, okay? You don't have to wait until April 16th. If you owe money to the IRS, you have until April 16th to send your money in, but you could file now. So if you do expect the refund, you probably want to get your taxes filed as soon as possible. Married, the standard deduction now is almost $26,000. It's $25,900 to be exact. So just letting you know, expiration of a number of tax credits that were doled out because of the pandemic are now gone. And Congress has not extended them or renewed them. I doubt if they will. I would not count on it. Okay, so let's talk about scams. Do you know that the IRS never calls? They don't call you. They don't text you either. And they don't send you an email. The IRS communicates with you via regular mail, plain old U.S. Postal Service mail. That's how they do it. So when you get a call or a text or an email, it's a scam. Don't fall for it. We warn people about this every year, and it still happens. So we need to make sure that we are safe. So if you do get a letter from the IRS, don't just call the phone number. This is really getting maybe a little safety precaution here, but you could actually Google the IRS. You could go to the IRS website or Google IRS phone numbers and cross-check the phone numbers in a letter you get with the IRS's numbers to make sure that the numbers are actually legit, because you don't want to be calling someone up, handing out your social security number and other personally identifying information. And before you know it, your information's in the dark web, you're getting scammed, and somebody just spent $20,000 on a credit card in your name, which you are now responsible for. Okay, so that is one thing. Another thing for taxes, no 1099K this year. That has to do with payment services like Venmo and PayPal. We expected that anyone who gets $600 or more in payment from those services has to file a 1099K, and it could be a tax situation. The IRS is going to keep it to the way it was before, which was like 20, I believe it was 20-something $1,000, and a lot of payments coming in. So that will be put off till next year. But if that is your method of payment, you just know that it's coming, but you got to break because it's not going to be for this year. I know we are almost up to the commercial break, so we've got a lot more to cover. You are listening to 103.9 FM, LI News Radio. Please stay tuned for Back to Business right after my show with David Levenstein. He's always got someone interesting, and he's also a really good guy, and he's also my friend. So you definitely want to listen to him. Okay. Now, let's talk about a couple of big other things. I don't know if we're going to cover this entire topic before the commercial break, but I want to talk to you about where you could put your money. I'm not talking about investment. I'm not talking about investments. I'm talking about your safe money, savings, emergency fund, because you now actually have a chance to earn real interest on your money now that interest rates have risen a lot. And that's something that many of you are not used to. And if you're my age, you haven't seen a decent rate at the bank in until now, like probably going back about 15, 16 years now. So we're going to talk about that as well. I looked at CD rates. I was on bankrate.com. I was on Chase. But there are other alternatives that are not talked about as much, that might take a little bit more effort, but are stable and safe. And we're going to get into those as well. So definitely stay tuned, please, for that. I don't want to just dive into it until I know we've got a good 10-minute run without a commercial. Okay. And then I want to talk about how to measure your spending. And we're going to talk about paying off debt, putting money aside. And the big question I get for people is, should I stop contributing to my retirement plan, to my 401k, for example, while I'm setting money aside for an emergency fund? I'll answer that real quick. The answer is yes. I think the most important thing you need is an emergency fund, and that comes even before you invest for your retirement. Now, that's like 99% of my time today is spent on helping clients prepare for retirement. So we definitely want you to have an emergency fund. I think that's pretty much dogma in the financial advice industry. We want you to have the emergency fund first. Now, you don't, how much of an emergency fund, that is debatable, but an emergency fund is just that. Things happen. It's called the GOK fund. God only knows what's going to happen. And you need to make sure that if you get laid off, a real emergency comes up, something where you need money right away, you need to have it in the bank, and you'll sleep a lot better. It's also a matter of financial maturity to do that. So finally, the music comes on. I'm going to give you guys a break. I'd love to know where you all are listening from. Are you in your car right now? Are you listening in your office? Are you listening in your kitchen? Are you listening while you're working out? I would love to know if you could find my post, Money in the Morning with Mitch Goldberg, on the Facebook page of Long Island News Radio. Let us know. I'd love to hear from you. And I always enjoy reading your comments, even the nasty comments. I love reading them all. And I greatly appreciate you giving me a chance to reach out to you with some good old-fashioned, everyday financial knowledge. You're listening to 103.9 FM, LI News Radio.
All right, 10 minutes on the clock.
I feel like we're doing a lot better today.
You feel we're doing a lot better?
Yeah, I just feel like I'm much more comfortable. I feel like I have a better flow. I just feel like the first couple of days I listened to the shows and it was like so cringy. Like I do live every day, so this should be easy for me. But I guess the fact is, I know my audience on on social media a lot better than just on the radio.
Yes, definitely. And also, as I said yesterday, it comes with time. You sort of like adjust and learn your flow with doing a live show.
Yeah. Now it sounds
1 minute
okay,
remaining.
but okay, 1 minute. I have an echo. I did. It's kind of better now.
Yeah, we're
Sorry to blow my nose in your face,
we're
everybody.
still trying to troubleshoot that a little bit, trying to figure out what is causing that. Because you're not the only live show remotely that it does that with, so we're still trying to figure things out with it.
I have a cable that John put in here that is with a splitter. I wonder if I just replace that cable and get rid of it. I don't need the extra splitter. Maybe that's it.
We have less than 30 seconds, but a splitter, is it splitting the audio and the mic?
No, it's just they're only using one half.
Okay.
It's the,
I don't know the equipment.
Yeah, no,
I wouldn't know what to do.
I have to go
that
on.
Might be something you want to bring up with
I'm gonna go on
the
B&H,
engineering stuff.
And do that.
10 seconds.
Okay. I want to manage your Facebook page, by the way. It's underutilized. 5 seconds. All right, we're back. Let's cut the music. I want to cover some information, get to a lot of stuff here, and make sure we're covering a couple things. So, places for your cash. And I have a place for cash to tell you about that you might not have even thought of. And before you roll your eyes and say, oh, what's he trying to sell us? No, 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 nothing like that. Okay. I was quoted here. So let me start by saying this. I was quoted yesterday in an article on CNBC. So if you don't know this, CNBC.com is my jam. I've written a ton of articles for CNBC, and I'm quoted often there. And the article is high yields have investors piling into money market funds. Here's what you need to know. And I'll just get to my quotes because it's my show, right? All right. But now this is how I'm going to make a point. So here's what I said, quote, like any other investment, I'm talking about money markets, like any other investment, they are good for the right reason. A stable place for the assets one wishes to preserve. Financial advisor Mitch Goldberg, president of Client First Strategy, set of money market funds. But with money market yields higher than the dividend yield of the S&P 500, the S&P 500 is like a 2.5% dividend yield. Money markets are routinely above 4% now. Cautious investors are asking themselves, why not keep my money in this while I wait to see what happens with interest rates, inflation, and the economy, Goldberg said. All right, so that got me thinking how guilty of this as well. I have money sitting in a checking account just because I'm used to keeping money there because it's, why not? It's not like I'm missing out on anything, but the interest on my Chase checking is, I think I got 0.4%. But looking at CDs, I went on Bankrate. Capital One has a 4.15% for 1 year. I'm trying to find banks I'm familiar with. These are a lot of like online banks. Barclays, I think that's really .com is 4.25% for a year. There's lots of others. Discover 4.15. They're okay, but you could basically walk into any bank and get 4% for a year. You could get better yields than what you're getting for, in a checking account, probably better than a savings account, in a money market fund also. And money market funds are useful because they're liquid. You could take the money out when you want it. Some have restrictions, like maybe you can only do 3 checks a year. A month or something like that. You have to figure out if there are terms and conditions. But one place that a lot of people have not looked, are Treasury securities. Now, someone said to me, yeah, but I went into CDs. A friend of mine said, but I went into CDs because they're really, really safe. I'm like, okay. I don't want to come out and say, oh, Treasury securities are safer than CDs, because then I'm implying that there's something not safe about CDs. They have FDIC insurance to limits, $250,000 per account. But what I could tell you is CDs and money markets invest in T-bills. A T-bill is a treasury bond issued by the U.S. Treasury when our government borrows money. But if it's a year or less, the treasury bond is called a treasury bill, a T-bill. Okay. And a 3-month T-bill is currently 4.68%, and a 6-month is 4.8%. I don't see those yields from any money markets or CDs. The fact is, CDs and money markets invest in these and give you back a little less because that's how they make their profit. I'm not saying there's anything wrong with a financial institution making a profit. I am a financial institution, but you are getting really solid yields. You could buy these directly from the Treasury. You could buy them through your financial advisor. You could buy them through the bank. If there's a commission on them, they're typically either there's no commission or it's like rock bottom low commission. If you have an online broker, you can buy them through there. So this is just a good place to be. And this is the only time I get to say these are safe and guaranteed. Like even when I talk about money markets, I can't say safe and guaranteed. I have to say stable. And for preservation of assets, I have to be careful with the words that I choose, compliance reasons. But the risk-free rate when you do any kind of economic analysis or measure any kind of stock is the 90-day T-bill. That's the risk-free rate, 4.68%. But these are guaranteed to mature, to give you your money back, to pay this interest. So that's a place you might not have thought about, but if you're really someone who's looking to maximize your return, and you don't mind investing outside of the bank, it's very easy to go to the bank and just tell the person at the bank, just split my money into the CDs or something and leave it at that. It's just very easy and convenient. But if you want to go a little bit above and beyond, you can go into treasuries. This is what I do with my clients because for me, it's 2 clicks of a mouse and I do it. But for you, it might be a little bit more effort. But really, if you're at the bank and you tell them you want this, it shouldn't be hard to do. They might make you open up an investment account, and you might have to sit down with their in-house financial advisor. I'm not particularly enthusiastic about that idea. I like financial advisors who are not in the bank channel, because I feel we're independent. But that's a whole other story. Okay. So let's talk about financial advisors. We have a couple of minutes left. The industry is rife with conflicts of interest. People are trying to sell you something. Now, people have to get paid. You know that. That's why I really think that the first job of a financial advisor, especially like for me, when I sit down with a new client in the first meeting, I am a teacher. I have the heart of a teacher. My goal for you, and this should be with any financial advisor, the goal should be to have you leave the meeting smarter about money and finance than when you walked in. And it might take a couple of educational meetings to get you on your way to the point where you are confident enough to make decisions. But above all, remember, it's your money. It's not the financial advisor's money. It's not his or her money. And if they're talking over you and talking like in circles and you're not getting it and their job is more to impress you that they know everything and just do what they say and don't question them, I would actually say thank you and leave their office, or leave the phone call or Zoom and not return. And find someone who's going to educate you. Because when you're educated and you know about what you own, why you own it, what it's supposed to do, when you understand that there's ups and downs in the markets and you understand your time frame and your risk tolerance, you're more likely to stick to your financial plan. And we always say this expression, time in the market is more important than timing the market. And if you have the knowledge of what I'm talking about, you're more likely to stick to your plan over time. And that is the main determinant of whether or not you'll do well over time, as opposed to darting in and out and switching from one hot financial product to another, chasing returns, only to find 10 or 20 years go by and you haven't really made any progress. So we want you, any financial advisor should want you to be able to stick to your plan. So important. And also, I don't like investments with like back-end sales charges or something where you can't get out. If you decide it's not for you, you should not be locked into any investment or financial strategy, in my opinion, because you're locked in because of a financial penalty. You should be in that investment because it serves your purposes, your best interests, because you know it does, based on everything you've learned, everything that your trusted advisor went over with you. That's what keeps you in an investment. Okay, that is what helps eliminate conflicts of interest. Oh, I hear the music, and I've got to tell you, my biggest concern about this show was, what am I going to talk about for a half hour every day? And here I find myself screaming in my head that, holy cow, the time went by so fast. I've got so much more that I want to teach you. I so hope you're getting knowledge out of what we're talking about. It is my honor to serve you and to speak with you every day. Thank you for letting me into your car, your home, your office, your earbuds, wherever you're listening. You're listening to LI News Radio 103.9 FM. Thank you, LI News Radio, for this wonderful, wonderful opportunity to speak with your listeners every day. Have a great day, everybody. I'll see you tomorrow.
Securities and investment offered through Next Financial Group Incorporated, member FINRA SIPC. Client First Strategy is not an affiliate of Next Financial Group Incorporated. All the views expressed are those of Mitchell Goldberg and Client First Strategy and not those of Next Financial Group Incorporated. Views are general in nature and not intended to be investment advice. Any discussion of individual securities should not be construed as a recommendation or solicitation by our presenters. Next Financial Group Incorporated does not provide tax advice.
All right, we're off. Thank you, everybody in social media world, for checking this out. I'm going to head out, and I will speak with you soon. Thank you.